Hello all my viewers around the globe, welcome to my channel. This is Simaligas. For today's video, I want to show you how you can trade future trading on Bybit account. So just stick with me until the very end. And if you don't have a Bybit account, just go in my description below and you'll find this Bybit account. And you can earn with me 3,000 US dollar if you open an Bybit account with me. So with that said, let's dive into the video. Future trading and spot trading are totally different, and when you want the transactions or anything concerning future trading or derivatives, you're going into derivatives. And even if you go in the account, you will not see your amount in spot wallet. You will find that amount in future tradings or derivatives. So this is how it will look like. So once we start, we are going to go on derivatives. Then you come here on US dollar preferentials. Then you select any pair that you wish depending on what you expect in trading. So let's say we are going to use BTC USDT. So this is how your account will look like. This is standard, this is trading view, and this is depth. With future tradings, we have always to select our leverage. Our leverage is always there is cross and isolated. So cross means that if at all maybe we have $1, let me say we have $1 and we want to use leverage. So that means that if I need a leverage and I put $1, it means I will trade $1 exactly. But when I say maybe let me increase my leverage up to maybe 5%, that means that I will be trading $5 now, but on my account I'll be having only $1. So this means that if at all my account is having $1, so it means I have right now $5, like that. So the difference between long and short, this one means that if I believe that the market is going up, that means I'm going to long. That if the market goes up, I'll make profits, and if it is going down, here we make profits both when it is going up and when it is going down. And when I believe that the market now is going in bearish, then I short my trades. So that's how it works. And when you set your leverage, in most cases I advise people not to go beyond 10 leverage because it is very risky, and this one is for experienced traders only. So the difference between cross and isolated, let me talk about this one also. Cross means that if at all you have $1 might be on your derivatives or in future accounts, and that $1 goes after maybe you have made a loss, so your account will not stop. It will go even in spot wallet and use the amount that you have, so that your account or your trade can be sustained from the money that you have used. But when you use isolated, that means that you're going to use the specific amount of money that you have in the derivatives account. So that is the difference between isolated and the cross. So hope you have understood, and once you are done, you're going to confirm here, and once you're done, then it will look like this. For me, I have 14.5 isolated, and I have, this is long, and short I have 5%. So under here you're going to see whether you have your amount. Let me hope that you know how you can deposit your amount on Bybit account. So if you don't know to deposit money on your Bybit, you just go in this very channel and you check that video, it is there, and you see how you can deposit your money. So hope you have understood that one. So you will find a lot of things. There is open and close. So here we are going to use open. Let me say I'm going to use, there is limit, market, and conditional. So with the limit here, this is the price that I'm going to buy from. This is the order by quantity. This is how many BTC that I want to use. So this is here you can short or long. So with price, I can say maybe I want to buy my trade at this price 22129. Then the quantity, let me say I want to use 10 BTCs. So once you're done, then you're going to buy, depending on, maybe you buy long with take profits and stop loss. So with take profit, maybe you've made your analysis before you started this trade, so you expect your trade might be to go up to 24,000. so you will say that once this trade reaches on might be 24,000, then it will trigger itself and sell itself. So with stop loss, you expect maybe you have bought from this very specific price, this one, but you expect and you can say maybe if at all goes down and it goes down, instead of making profits as you predicted, now it goes in losses. So you can say that once it reaches on 21,000, then it will trigger itself and sell itself. So you can select now long. So once you select long, it will automatically sell itself, and once it reaches on this specific price, it will buy itself. So if you want to see how it looks like, now you can see that I have a position that is right now open. You can see that this is the leverage that I use, this is the quantity that I have, this is the value, the entry price that when I entered, this is the mark price, this is the liquidated price. This liquidated price is very essential in case I don't set the stop loss and my position goes down. So it means once it goes down up to this price, it will trigger itself and I lose everything which I have in this specific trade. So it means you have to set your stop loss as early as possible. So this is the position margin, this is the percentage that I have already gained since I entered in this trade. This is what I have already taken after all, because this trade I entered it long time back and I made some profits and I took it all. So this is how you can get it. So if you want to use market, this market, it doesn't mean that you can set the price, it will trigger itself at that specific price. So you can put, this is the quantity, you put maybe I want to buy 10 BTCs, then you set the same way how you have set in a limit. Then once you say trigger, then it will trigger itself. So if you want conditional, you can also still use, this is the trigger price, this is the order price. So you can say that this is the order price, then you say the trigger price, you put the price where you want that specific position to be triggered from. So this is the quantity that you want to use, then you set the buy long with your stop loss and taking profit. Then once you sell long, then you will have already entered in the future trading profits. So that's how it works. Actually, it is as simple as that. So you have to set everything in that. So if you don't have any account, just go in my description and you open an account with me. And if you haven't subscribed to my channel, please subscribe and click on the bell icon so that you don't miss anything from Sima Crypto. Hope you have understood everything. Bye for today. Good luck.